Gift City is now the in thing. Everybody is looking at Gift City, IFSC, and now the time I think the first of the IPOs also are likely to come. So that will present its own sets of opportunities and challenges. So the speakers for today, I'm sure will enlighten us and help us navigate through this journey. So it will be useful for us professionals going forward. Before I hand over for the further proceedings, just a very brief introduction about BCAS. BCAS is India's, for those of you who are not members, BCAS is India's largest and oldest autonomous voluntary body of chartered accountants. It is 77 years old. We have a membership base in excess of 12,000, spread across nearly 400 towns and cities. BCAS rests on three main pillars.
Privileged to introduce today this set of stalwart speakers, and just to save on the time of the participants and to give more opportunities to the speaker, I would introduce all these three speakers so that we have participants who are here to listen out to the faculties and have a very meaningful dialogue and session today. To start with, Pradeep Ramakrishnan ji, who is the executive director at IFSCA, he is a company secretary and was part of the SEBI team from 2002 to 2024, handling compliance and monitoring division, corporate governance, listing related issues, BRSR, forensic accounting. He has also handled Department of Debt and Hybrid Securities, corporate bonds, municipal bonds, sustainable finance, and has now been part of the IFSCA as Executive Director since February 2024. I welcome you, sir, to this platform of BCAS. We have a very meaningful, a very warm response to this program. And I understand from the events team that we have 650 plus registered participants today on this platform. Ashok ji, who is the Chief Regulatory Officer and the Chief Risk Officer at the India INX, is a Chartered Accountant, a Company Secretary, has done his visa from ICAI, and also done his the postgraduate diploma in Securities Law from Government Law College, Mumbai. He has been working with the regulatory team of BSC Limited since April 2007 and has wide experience in the gamut of IPOs, listing, QIP, scheme of arrangement, debt, delisting, NODR compliances, and has also closely worked with SEBI on its various committees. CA Bahroze Kamdin, who is a chartered accountant and has more than 30 years of experience in corporate and international tax with a focus on financial service sector. She has also worked with the industry association and written articles on topics of interest to financial service sector. She has been the member of the expert committee on secondary market formed by IFSCA in 2023 and was also awarded the ICAI Women Excellence Award in December 2023. I welcome all the speakers and request Pradeep Ramakrishnan ji to deliver the keynote address and set the tone for today's discussion. Welcome all.
Thank you. Thanks a lot. I just want to add something, Kinjalji, that I am also half a chartered accountant. I am not a chartered accountant, but I finished my inter, so kindly consider me a little bit part of your fraternity, at least a honorary member.
Absolutely, absolutely. It's our honor.
Thank you. Thanks a lot, and thanks so much for inviting us. And we know the reach of the CA Institute, and that is exemplified by the fact that 650 people have actually participating as we speak, and it's also a testimony to the fact that people are interested to know about the GIFT IFSC. So, and I'm quite happy. I'm sure Ashok also shares my views because we both work here, and I'm sure we'll try to add some really add some value today. So let me just start by going back in time as to why the IFSC was set up and where we are now, and particularly on listing. The nuances of the listing and other things will be, of course, taken by Ashok. But what I would want to tell you is that I would just want to set up set the tone for the discussions for today. See, we while we became independent as a nation in 1947, for a period of almost 44 years, we have been following a largely a socialist model of economy until 1991. And in 1991, we knew what happened. While we didn't default on any loans, but we were actually forced to ship our gold to the IMF to obtain more loans. So that was the time when probably the ruling establishment thought that probably we have to do something different. And one of the conditions that was imposed by the IMF was to liberalize our economy for extending further credit. And promptly, a lot of changes, structural changes were made. Delicensing was done. Globalization, privatization, and liberalization, as is now become very famous, the terminology of LPG actually happened in 1991. While this happened in 1991, the benefits of all these things started trickling in the late 90s and early noughties. Now, while this was happening, while India does not have a full capital account convertibility, there were committees which were set up to probably explore what we can do as far as this is concerned. So Tarapur Committee 1, 2 and all happened, but each of the recommendations was actually marred by a larger crisis. The first committee, then there was the East Asian crisis. The second committee report came when the global financial crisis happened. So under the chairmanship of Percy Mistry, a group was set up and a report was produced by that great man called Mumbai as an international, as a regional finance center. That was how it was started. That was supposed to be the topic, but then they found, after discussions, they found that probably we have to make it as an international finance center, and that's how the report came about. But for various reasons, inertia, political, there are so many reasons why things happen in a democracy. There are the same reasons as to why things don't happen in a democracy also, as we know. But for some reason, so it could not take off. And going by the amount of traffic in Bandra Kurla complex, in hindsight, it's good that it did not take off. Because there was another enterprising man who is the Prime Minister of the country today. He jumped at the thought of why not establish something in Gujarat. Now, so in 2012, the decks were cleared, and they said that why not set up something in near the near Ahmedabad, near the capital city Gandhinagar. So a small plot of land, plots of land around 300 acres was identified as a special economic zone. A very interesting thing about the special economic zone is it's India's only special economic zone that is exclusively for financial services. Generally, you have special economic zones which are there for manufacturing. So this is the first thing that is exclusively for financial services. And while the decks were cleared in 2012, foundation stone was laid. But after the change in the government in 2014, from 2015 onwards, a lot of things started moving in motion. Right from having special carve-outs under the various rules and regulations. And the reason for this is also quite interesting as to why the idea of an IFSC came about. See, while we know that because of certain domestic compulsions and also because of the fact that we don't have full capital account convertibility, we will not be able to have similar rules and regulations also in the domestic ecosystem. But this led to an exodus of Indian businessmen and others to other foreign lands. Now, at one of such trips, the present Prime Minister actually went to Singapore and he found a lot of Indians working. And he asked them as to why are you not doing this in India? And they said that given the ecosystem, now, first of all, ecosystem comprises of bankers, you have professionals, you have consultants, and you have the entire intermediary ecosystem. Secondly, rules and regulations are quite easy. And the main thing is that we can trade in the international currency of trade as of now, which is the dollar. So he said that, okay, why can't we replicate something that can be done in a small enclave? Now that enclave is what is the Gujarat International Finance Tech City. Now, there are also a lot of doubts on whether there can be more IFSCs. Now, if you look at our own emblem, it says we are the regulator of International Financial Services Centers Authority, which means that there can be more, international finance centers later, of course, depending on state governments and the central government policy, because it entails a lot of exemptions, etc. Now, between 2015 and 2019, the regulators of the home jurisdiction, that is SEBI, IRDA, the central bank, the RBI, and PFRDA, had jurisdiction over this place. And they were bringing in certain rules and regulations. Certainly, essentially, these were carve-outs from the existing broker regulations, existing FEM NDI rules, and all that. So it was very difficult to have four different regulators, coming together and agreeing upon things, and also regulating an ecosystem. It becomes quite difficult. So a need was felt for a specific regulator, which could be an integrated regulator, a regulator who can have the powers of all these people for this particular enclave. Now, if you look at the GIFT city, there's a total of around 886 acres, out of which 500 and almost 600 acres is what you call as a domestic tariff area. The international area is the remaining 290 to 300 odd acres. And this 300 acres is what you call as an international finance city. Now, this international finance city, as on date, almost 47 buildings are under construction. And you will not believe it, there were just two buildings of 4 or 5 years ago. And now the amount of activity that is happening here, a lot of everyone in India actually wants to have a piece of the IFSC, which is a good thing. And what do we actually do, right? So that is something which we have to start with. Now, these international activities of Indian companies, if you want to provide financial services abroad, TechFin services abroad, and you want to raise money, essentially raising of money, raising of finance, those things can actually happen in the IFSC. So what we have done is that we have sort of created 40 regulations. So the same Indian regulations cannot apply here. They have to be light touch. They have to be contoured to fit into business that can actually be carried on in a Singapore or Luxembourg. So if we have to sort of compete with the Singapore or Luxembourg or Dubai, then it is essential that our regulatory ecosystem is similar to, or if not, or competitive to how it exists there. So similarly, what we have done is that we have crafted 40 regulations as we speak. Just imagine we were supposed to start with just 4 verticals, right? The capital markets, banking, of course, and security and insurance and pension. Today, we have n number of verticals. There are 40 regulations, which means that there are at least 20 odd verticals. So that is how it actually expands. And this also shows that the amount of potential that actually exists in this place, right? So once you start with banking, then we find that, okay, there is a need for finance companies. Then we found that there is a need for payment services providers, right? Then there is a need for trade finance. So, and it is just expanding like anything as we speak. So just as I told you, there are 40 regulations covering various aspects. Now, when it comes to listing, now we all know that India is one of the hottest stock markets in the world. And of course, a lot of Indian companies are, in fact, it is number 2 in the world in terms of, number 1 in the world in terms of number, and number 2 in terms of raising of finance last year, which is something to really boast of, which actually explains the fact that there is actually depth in the stock market. It is just that the right stocks have to be picked. Now, a lot of these Indian companies also may have gone over the years, right? At least until 2014, 2015, Indian companies were issuing depository receipts, right? They were going abroad, they were listing. There are many Indians, like, one point in time, India's population growth was its bane. Today's India's population is actually its advantage, because 1 in 6 people in the world is an Indian. And we have, quite a lot of Indians who have gone abroad, set up businesses. So if you look at the IFSC in itself, the IFSCA itself has been set up with the threefold objective. One is what we call as an onshoring the offshore, like bringing the international businesses back, set up by Indians or even otherwise, bring them back, ask them to set up here. What is it that makes you tick in Singapore? I will make it tick here. So come on. The second one is we need to be a hub for international finance, right? Being a hub for international finance will be banking, or whether it comes to listing, equities, debt, all those things, including the funds. In fact, the fund management vertical here is the most successful. There are close to 300 funds, 200 plus fund management entities which are here. And the third one, of course, for any regulatory ecosystem, whether it's in India or abroad, the most important thing is that you have to be innovative. You have to, because just look at the amount of changes in that finance world that have taken place. People are talking about tokenization. People are talking about, so many innovative structures which actually are there around the world. So this is the third objective, to be a hub for innovation. So we have something called an innovation sandbox, where you can test out dummy trades or dummy concepts. And then you move on to the regulatory sandbox, where you actually have real-time thing. And then many of these things actually get converted into regulations. See, the advantage of this place also gives us the flexibility to test out certain things which cannot be tested in India. We ourselves are a sandbox for India as such. Like, I'll give you an example. Like, here we brought in the concept of co-investment, which was not there in India, and India found it good and they actually adopted it. Similarly, we have brought in something called a platform play. A platform play is nothing but an existing fund management entity managing third-party funds. Now, I don't have the wherewithal to set up a fund, or probably I feel that setting up a fund is too costly. So I'll rope in an existing fund manager and ask him to manage my fund. So these are various things that we have been able to sort of bring here. And over a period of time, we have been able to bring international funds, Indian funds, which have been incorporated in Mauritius and Singapore and other places also, to this place. Now, coming to listing. Now, listing, raising of money actually happens in two ways. One is bonds, and one is, of course, equity. Apart from banks, banks actually have lent close to almost 80 to 90 plus $billion from this place. If you actually convert a billion into a rupee, then you'll actually have the impact, of how much actually it has been raised out of this place, right? And out of bonds, this is a thriving bond ecosystem. Almost 175 to 180 issues of bonds have happened in this place, and many of them are by Indian companies. And we also have international organizations like the ADB and the IFSC, which have raised money out of this place. And we are having good big clientele also raising funds. Now, it actually goes from different sizes, 10 million onwards, to almost even 1.5 billion has been raised in different issues. Now, one thing which is important is that we have a homegrown rating agency also, which has come here. Now, I want to tell you something very interesting. See, all these years, we have been, sort of subject to what you call as a hand-me-down rating by international rating agencies, right? We know that we have international rating agencies who say that, no, your country is BBB minus, or your country is this. So you don't have any other way of actually saying that, no, I actually am better. Can you see this? Why don't you see my report card? So now, why is this important? Depending on your rating, there are international investors who are going to invest in your company, in your country, and also into your companies, right? So it actually has a lot of ramifications. You will not believe, for 17 years, and you know what has happened in the past so many years, particularly in the last 20 years, more so in the last 10 years, India's GDP has galloped. We are at number 4. A lot of people have been lifted out of poverty. NPAs have reduced. Now, all these things should have automatically resulted in an upgrade of rating for India, right? But it never happened. For 17 years, there was no upgrade of rating as far as India is concerned. Now, there was a homegrown agency. For the first time, an Indian credit rating agency actually took license here. And while they started, they did a sovereign rating of almost 39 different countries. And most of these ratings were different from what these international rating agencies had actually given them. You will not believe, within a period of 6 months, a lot of course correction actually happened, right? These international rating agencies actually changed the ratings of the other countries which they have done. This is what you call is an impact of IFSC. If someone asks me what is the impact of IFSC, this is what, because this actually has an impact on world economy, and that is what an international finance center is set out to do. Now, India's rating was upgraded for the first time in 17 years, right? So in no small measure has actually this contributed to that particular thing. So almost $70 billion has been raised, $70 to $75 billion has been raised in debt. Now, so that debt listing is successful. Today, if an Indian company wants to borrow abroad, right? In case you want to loans, then you go for banks from here. In case you want to go for bonds, then nothing better than going for the IFSC ecosystem. So this is the most preferred place from where, in case you want foreign loans. Now, the third one, which I'm quite excited about, is equity, right? Everyone, if you take any ecosystem, the strength of that particular ecosystem lies in equity, because from equities spring derivatives, a lot of other instruments which are quite important. Now, equity, we have decks are cleared. A few things are getting worked out. The first equity issue should be listed within the next 1 to 2 months here, after which there will be a lot more equity issues here. Recently, SEBI also allowed merchant bankers from India to open branches here. Until now, they had to open only subsidiaries, right? So a subsidiary, of course, establishing a subsidiary has its own nuances and a lot of cost. And unless you know that it is really going to be successful, you will not be able to risk that. So to mitigate that, SEBI, thankfully, with a lot of requests from IFSCA, SEBI has been kind enough to allow merchant bankers in India to set up, branch offices here. So amongst the group, in case there is anyone who's working in a merchant banker, you know where your next destination is. Please call up, pick up the phone, call us, and then we'll help you out to do this. Broking is an excellent ecosystem. Now, one of the themes of today's discussion is NRI investment, right? Now, we know that in today there are almost 36 million Indians who are either NRIs or persons of Indian origin. This number is only growing with almost 20 lakh Indians surrendering their passports every year, right? So this number is actually, bourgeoisie. It is just, going up. But those people want to invest into India, come to India, invest in India. So you will not believe money comes into the IFSC in funds from 70 countries. Money goes from the IFSC to 20 plus countries. So this is a testimony of the fact that the fact that the IFSC, the gift IFSC is actually a growing ecosystem, right? So here we have a lot of these Indians who are internationally who are there who want to invest into India or into the IFSC. Say they do it through brokers. Now, for Indians to invest abroad, many Indians are now investing abroad, like in stocks abroad. We have brought something called a global access provider model. I'm sure Ashok will also be able to throw a lot more light on that, because the India INX also has a subsidiary called the India INX Global Access, which actually makes Indians to invest in Nvidia, in Amazon, in any of these stocks in Brazil or any other international stock exchange through brokers here. If you want to invest in an international mutual fund, you can do it through the INX GA, for example, or the NSE ISGA, which is going to start operations. So this actually widens the scope of where you can invest, hedge your bets, because today's Indian is someone whose is quite wide in scope. So a lot of things are happen where the Indians can actually look at investing abroad, different avenues of investing. So those things happen through the IFSC as we speak. And I'm very happy to tell you that while out of these 300 odd funds, until now, non-retail has been the flavor. In the last few months, after a particular tax piece was fixed, mutual funds have started from this place. And you can invest in mutual funds for as low as even $500. I mean, it can even go low. But today, one of the mutual funds is offering you at $500, the minimum investment as in the mutual fund. So it opens a window of opportunity for Indians, for NRIs also, both ways, money coming in, money going out also. So this is essentially that hub through which money will flow. Now, looking at the future, we also have interesting verticals like aircraft leasing. You will know India is the largest buyer of aircraft in the world, passenger aircraft in the world. But we do it out of Dublin. Why should we do it out of Dublin, right? Why can't we do it out of this place? So we have brought here almost 290 to 300 different types of aircraft and aircraft-related, equipment has been now purchased out of this place. Air India, Indigo, etc., are setting up places to, make this place a hub. So essentially, IFSC is a place which is buzzing with action every day. There are things that happen. Innovations are happening. There are so many different things. Thankfully, this enclave actually helps us, and the fact that we are cut off from the domestic rules and regulations has helped us to experiment and also come out with solutions which will in turn ultimately benefit the country. Because we all know that the government has a very lofty ambition of a developed India by 2047. And developed is a very small word, but has got big import, right? And if we have to do that, we have to be a very strong player as far as finance is concerned. And while we know that we have really reached number 4 in GDP, we'll be galloping towards number 3 probably in the next 3 to 5 years. But it also is important that we also are having a robust international finance center, and that is what the IFSC aims to do. So what I will do is that I want to tell you something. Now, it's certainly not possible to encapsulate what we do, who we are within a 20-minute lecture. But I want to tell you all the people who are there and those who want to know, who crave for knowledge, who also want to do something in the IFSC, because all you chartered accountants, you would want to expand. You want to open offices. Why can't you do? You look at America. America is losing as far as the number of accounting professionals every day are concerned. So there are a lot of things are getting outsourced. Why can't you do it out of here? 100% tax exemption is there for BATF. We have brought in something called bookkeeping, accounting, taxation, and financial crime service providers. So you can actually set up your office here. You can combine your work with a company secretary or a lawyer. Any different types of firms can be formed here. So the possibilities are, infinite. So you can actually come and do that here. So what I would suggest is please go to the IFSCA website, right? The IFSCA website, because every time people say that you go to the website, a website actually throws you so much information, you don't know where to look at. What we have done is that we have come out with certain nice brochures. These brochures will be primers for you. These primers will give you the information as to what IFSC is, what that particular rule or regulation is, what are we trying to do, where are we getting at, and what is the mind of the regulator. As for example, for listing, we have a beautiful brochure. For debt markets, we have a beautiful brochure. Here, the ESG bonds are quite a big success. Almost $17 billion worth of ESG bonds have been raised because we accept all international taxonomies. So you just look at all these brochures which are there, go through them. Many of them are self-explanatory. They will give you an inkling as to what you can do out of this place, and it will also give an inkling for people like people who are NRIs who can invest here, and also Indians who can invest abroad. So what I will do is here, I will, I have spoken for close to 30 minutes. I will stop here, and I welcome you all to GIFT City. I mean, you can always come here. We are within India. We are part of the same country only. We don't have a separate flag or something like that. Please come here. We are always available to help you out. But what is important is go through our brochures. Just it is important for you to learn and understand as to what the IFSCA has done over a period of time. And I will tell you what, you can't miss us. The reason is, over a period of time, I'm sure the ICSI is already adding a subject. Already they have one chapter on IFSCA in the study material, and hopefully they will be bringing a separate book on one separate subject. Now, same, I'm sure ICAI also will be doing it very shortly. So over a period of time, you will have to but study about us, right? So why don't you do it now on your own and learn about us? It will be a good thing, and we'll also help you out. And there are a lot of articles that we have written which will be useful. Please go through all these things, and I wish everyone a lot of success. Now we actually have beginning the year with this. In fact, this is my second lecture this year, and the first through video conference. So let me take this opportunity to wish you all also a great year. Thanks to ICI for giving me this opportunity and platform to do that. Okay, let me stop my thing here. We have got very interesting speakers in Ashok and Miss Bahroze. So I'm sure they will have a lot of things to share with you also. Thank you so much for this opportunity, and have a lovely evening.
Thank you, Pradeep ji. Wonderful insights on the GIFT City, and we look forward to have you at some other programs on GIFT City arranged by Bombay Chartered Accountant Society.
Sure.
Thank you for your address.
Thank you.
Yeah. Ashok ji, you would like to start, or Bahroze ji, you would like to have the session first?
I will start, I guess.
Yeah,
and
okay.
Then we can all get benefited from ma'am's insight on the income tax side, so that it covers the entire product and what all we are offering. So with your permission, yeah. I have a small PPT I'll just share, and I'll just see this thing. Just give me 1 second.
Yeah, sure.
So the PPT is visible, and am I audible?
It's perfect.
Yeah. Thank you. Thank you very much for inviting. And it's it's a privilege to be part of the group, such a big group, because Mayank has told me more than 500 participants are there already registered with this. And it is always very exciting to speak once Pradeep sir gives the tone for the IFSC ecosystem, because he so nicely covers the entire setup, how it is working and how it has evolved over the year, what is the philosophy and what is the vision of IFSC, and for the our leaders for this financial service center to grow. And me and Pradeep sir, we go along wherever Pradeep sir goes. I'm like, a Hutch person. I follow Pradeep sir. So when he was in SEBI, I think more than 10 years we worked together on different department in CFD, in DDH, Department of Debt and Hybrid Securities. And now he came to IFSCA, and then I followed also here in this thing in the exchange. So he's again regulator side, and I'm here with the exchange. So because he has always been guiding factor for all of us, whether it's for SEBI, where it is in IFSCA. So thank you, Pradeep sir, for being there for all of us. So I'll just share a little bit about us. I'll think it will go full screen. I'll just figuring out. Otherwise, I guess this is visible properly. So a little introduction first. So we are India INX. We are the subsidiary of BSE Limited. We are the exchange here. And like if exchange is there, exchange and clearing corporation go hand to hand. So we also have India ICC, which is the clearing corporation set up here in GIFT IFSC. Whatever work is done by the exchange, it is cleared by the clearing corporation. This is briefly the structure in which we are operating here. And then we are having one wholly owned subsidiary, which is India INX Global Assets. GA stand for Global Assets, wherein we are providing facility to Indian investors and to other investors to invest in the market overseas out of India. So I will be covering the business of global assets, which Pradeep has already touched upon in terms of the global assets provided circular, which is issued by the IFSCA. So little background of BSE. Now, this is a little, what BSE as a group we are offering. I mean, in terms of the market capitalization, I'm not going to read out what is overwritten over here, but you must be knowing that we are the oldest stock exchange in Asia, first in India, and we recently completed 150 year of completion existence, 150th year, and a coin was issued by RBI on our name. We have, I think we are the largest stock exchange in terms of the number of listed companies. So more than 5,000 companies are listed, and more than around 700 companies have listed exclusive debt over the Bombay Stock Exchange. And with that legacy, we come here in GIFT IFSC when the vision was that the financial service center should be there. Then if we are talking about the financial service center, the ecosystem is complete with the stock exchanges and the products which are offered on the stock exchanges. Now, Pradeep sir has very briefly covered this part of the IFSCA. So I will just quickly touch upon. Uh, when we want to attract international investors and at the same time issuers from the globe, it is important for us to have our regulatory system up to the standard of the international level. And therefore, unlike domestic market, wherein securities market is regulated by SEBI, RBI is handling the currency flow, and then insurance regulator, then PFRDA regulations. All those regulators have been combined in one regulator, and IFSCA has also issued one portal, online portal, from which you can apply for different services which are offered through IFSCA. So this is kind of ease of doing business to promote the jurisdiction. So why we have India INX and the other exchange here in IFSC? Because when we already have BSE and NSE operating in the domestic market, because here all activities which are done over here, all the financial services which are provided and the money which is moving is in terms of these 15 currencies which are allowed here, and rupee is not one of them. Because if you have to deal with the rupee, then we already have domestic market which is grown and which is very much settled over there from the Indian story point of view. So there are 15 currency in which business can be done here in GIFT IFSC, and we have included almost all hit currency over here. Now, again, once we are talking about a jurisdiction to grow, and like sir was saying, this is the only SEZ when the financial service center related dedicated segment is there in terms of international financial service center. It was equally important to have the attractiveness available here for investor to come, for the issuer to come. So first thing is that once securities are listed, the security transaction tax which is traded on the stock exchange platform are zero. Similarly, commodity transaction tax is zero. Now, no capital gain for NRIs I am sure that ma'am will be covering in detail when you are investing in the product which are available on the stock exchanges here in GIFT IFSC, and the capital gain is on, then that time there is no tax, no stamp duty, and GST is zero for us. This is that much international financial service center that I have to come to office. I have to cross a custom barrier. We all are in this SEZ zone of IFSC, and all the gates have the customs house because GST is zero over here. So this is that much sense of our international financial service center. Now, first entity to come and set up, whether there's a broker, whether there's a banking unit, whether that is an insurance company, whether that is a credit rating agency, whether this is a treasury company of big corporates, whether this is a financial services providing company, whether it's a IT services providing company, which are coming and getting set up over here. Like Pradeep sir was saying, presently, what I see, the only 3 buildings are which are in full operation here in GIFT IFSC. But if I look from my window, I wish if you could have looked from my window outside, you see the huge construction which is going on. Around 40 plus buildings are coming up. So why they are coming up and why people are booking offices over here? Because they are providing 10 years tax holiday out in a bracket of 15 years in a continuous 10 years. So you can choose when you start your tax holiday, and then it continues for the 10 years. Then 9% MAT, but if you are assessing, coming in the new tax regime, then the for the issuers, if they are raising money from abroad in the dollar denomination bonds, the withholding tax is 9%, which I guess around 20% in domestics. Then if the interest payout is being made from this jurisdiction, then they have their tax exemption is available, and that is more related to the banking unit. I am sure that ma'am will be covering it. I said something which is updated, then maybe I'll also learn from the ma'am that side. So these are the basically tax exemption, and the basic exemptions which are attracting people here is zero GST and 10-year tax holiday. From the exchange side, no transaction taxes. So this Pradeep sir has already covered, but we have included it over in our slide just to give you an idea that how this entire jurisdiction is going. More than 310, which is September 25 number, I am sure that it is touching 350, are the fund management entities which are available over here. Around 90 billion is the amount of turnover that has happened in IFSC. Around 67 billion is the worth of the debt cumulatively which has been raised through this jurisdiction, debt instrument ke through. And we are the leading exchange in that side because we have around 90% share. We are the first stock exchange to set up here in GIFT IFSC. So we were inaugurated in January by 2017, 9th January 2017. Tomorrow is our annual day, that sense, by Honorable Prime Minister. And this was the only building in which I am sitting that was built up over here. And that time IFSCA was not set up. The IFSC related activities were handled by SEBI. SEBI was the regulator at that point in time. And then he has this vision that this financial service center should become a hub for the financial services and a trendsetter for various financial service related activity. So IFSCA has taken that vision forward, and when they have framed regulation, around 40 odd regulations, which Pradeep sir was telling, they have kept in mind the international requirements, and therefore they have made it so light touch. At that same time, very competitive. I will cover equity related provision very briefly, and you will understand that how much attractive this jurisdiction has become with the help of vision of our leaders, followed by the regulatory framework which has been provided by IFSCA. So we are the first stock exchange here in IFSC. We are first stock exchange to set up a green bond platform. We have around 153 debt securities listed with us. And the unique feature of stock exchanges in IFSC is that they are working for hours much more than stock exchanges in domestic part is working. we are working for 22 hours. So we start at 4:30 a.m. in the morning, and our trading session ends at 2:30 in the morning. The next day, date change in between. 2 hours are for EOD activities and for the starting the next trading session. And why 22 hours? Uh, Technically, we can work for 24 hours also, but 2 hours are just to gear up the systems and all. And reason 22 hours is that we want to cover the investor from across the globe. कहीं पे दिन है तो कहीं पे रात है, but we here are available for all jurisdictions, and therefore from Japan to US to other all jurisdiction at their convenient time they can come if they are trading in the securities which are available to us, and we are there to provide service to them. So we are working 22 hours, and you can just imagine how much employment we are generating, because we need to staff. We need to have staff from the surveillance side. We need to have staff from the trading activity side, because once trading is happening, then it has to be proper monitored from the all the angles. So that way, this is a good reason for us to have more employees and therefore generating more employment. In terms of the product, till now, we are having derivative products, Sensex derivative, which is our trademark product from our parent company BSE side, which is available in dollar denomination here. Because if you want to trade Sensex in BSE, it will be in rupee terms. But if you are an NRI and you don't want to be registered and an FPI and get trading in the rupee denomination in the Sensex derivatives, then you can come on India INX and you can directly trade in dollar denomination, because Sensex here is traded in the dollar denomination. We had listed green bonds, we had listed bond debt securities over here till now, and the framework has already put in place related to listing of equity shares. Now, equity shares can be listed. Sorry, I will cover in subsequent slide. So we can list equity shares. We can list the equity shares of the companies which are listed on the other foreign stock exchanges directly over here. We can, once equity shares are listed through IPO, we can, of course, they can come up with the FPO or other fundraising avenues, such as the preferential issue, KIP issue, REITs invest depository receipts. So we can list all of them over here. So this is set up. This entire setup is there for them. This is from more on the trading perspective. This is covering the same thing, but this is more for the pitching to the brokers. So I will just, for the sake of the time, because I will just skip this little part. And I think this I have covered related to trading of this Sensex, which is in USD. Tick size is 1 USD, 22 hours trading. 3 contracts are live at a time and expiry on last Thursday of a month. So these are some big names which have listed their bond issuance, and you can figure out from these names that have listed their debt securities with us. And these are the issuers of green securities with us. So these are just names. So I just want to save my time on explaining more on the equity side, which I want. I'm interested, and I'm sure you will be interested also. So apart from bond, IFSCA has also issued regulations, requirements for the listing of FCCB, and we got first FCCB getting listed over here from Paisalo, which is a listed entity, and we have also listed from the Sri Lankan bank. So this is the slide for which I was rushing other slides. I want to just very briefly explain you so that your mind is clear that how this entire listing ecosystem is working here. So till August, around October 2023, before amendment came, Indian corporates were not allowed to list their securities in a stock exchange outside India. When we say that particular X company is listed on a stock exchange abroad, technically they have listed their depository receipts over there. They have issued equity shares. Equity shares were listed on BSE and NSE, domestic stock exchanges, held by the custodian, and against that depository receipts were issued, which were listed over there. And then the vision of Honorable Prime Minister was subsequently further broadened by the Honorable Finance Minister in 23, when they said that Indian companies should also be allowed to be listed abroad. Then amendment came in the Companies Act, and Section 23 was amended, which allowed now companies to get listed in the permissible jurisdiction. And then they defined permissible jurisdiction as the stock exchanges which are there in IFSC, International Financial Service Centers. So if you ask a question whether Indian company can get listed on Luxembourg Stock Exchange, no, that amendment has still not come. They are allowed to list in the permissible jurisdiction, which is stock exchanges here in GIFT City, IFSC, International Financial Service Centers. Now, once that amendment came, then came actual rules under Companies Act, that is called LEAP rules. And because dollar comes into the picture, RBI also comes into the picture. But RBI power has been given to IFSCA. So RBI has also issued a circular under FEMA that is called direct listing scheme. Now, direct listing word is used differently for different purposes. Here, it is used in terms of that the company directly getting listed on the stock exchange in IFSC without mandatorily being listed on the domestic stock exchange. As of now, gentlemen and participants, I am talking from Indian company listed point of view. Therefore, I am talking about Companies Act, followed by rules which have been issued under the Companies Act, and followed by the amendment in the FEMA in terms of the direct listing schemes, which has been issued by the government. Now, the question was that when I was in BSc, I have worked around 20 years in BSc in the listing department, handling different roles from compliance monitoring side to listing side, IPO and others parts. So we were part of various SEBI committees. Many times this discussion was taken up by SEBI that what should be the ideal percentage which the public should be having in order to a company to be listed on the stock exchanges. And comparison was done with the international best practices. And now we are settled kind of with 25% public holding, as we all know. And of course, in case an sizable IPO, that number is reduced. But ultimately, the goal given to these companies, which are getting listed with less than 25% public holding, is to raise their public holding to 25%. So thumb rules for India remains that 25% should be public. Then when the IFSCA was framing the listing regulations, they studied all the jurisdiction, and they come to know that will be difficult because just wanted to remind you, IFSC Stock Exchange is not only for listing of Indian companies. They are here to list the companies across the globe. And therefore, the first thing which has happened was amendment in Securities Contract Regulation Rules, SCRR. So we all know, but for the sake of mentioning, I'm just telling this, that what percentage a company should dilute to get listed is prescribed under SCRR, Securities Contract Regulation Rules, specifically Rule 19(2)B. And then government has amended that rule, and they say that if you want to get listed in stock exchanges in GIFT IFSC, then only 10% is the dilution that is required. Which means that the promoters can very much hold 90% stake with them, dilute only 10%, and then they can continue to hold 90%. There is no requirement to raise it to 25%. So that is the big boost for Indian corporates, that are corporates from abroad who were earlier planning to get listed, and they were to set up a subsidiary in India and then get that subsidiary listed in Indian stock exchanges, because they don't want to, dilute that much percentage, 25% or any other percentage. So this is the rule now. For listing of Indian companies in GIFT IFSC, 10% you have to dilute. That is the SCRR amendment that came in August 2020 or 2024, I guess. Yes. Immediately that followed by the amendment in IFSCA listing regulations, which is International Financial Service Centers Authority Listing Regulation 2024. And then they have prescribed entire comprehensive guideline for the listing. And then in August 2025, we have seen filing of the first DRHP of XCD. So this is the company which has, this is the Indian company, rather I should emphasize on that, which has filed its first IPO. And because this is first IPO, a lot of things need to be, aligned from the regulatory angle. For example, we are professionals, so we know the connectivity with the depository, the connectivity with the brokers, and so many things are to be done. Because first IPO is always, first listing is always, need to be done in a very cautious way. That was the case similarly when we started the SME platform. in domestics. When the first listing was done with a lot of, thinking and cautionary actions, followed by more than 600 companies are listed at BSE alone. If you include other stock exchanges, we are more than, I think, 1,200 companies listed on the SME platform. The same way, once this is filed, things were getting aligned, and now all the things are ironed out. Most probably, we'll be seeing the first IPO of Indian company, or that way any company, for its equity share to get listed, to be open, and listing should be happening before end of this financial year, at the earliest, I would rather say. Now, since Indian company has already filed the prospectus with us, the RHP with us, which we are working on, like I'm saying, the SEBI, I mean, old habits, it will go with the time. IFSCA has allowed these companies to get listed on the stock exchanges in IFSC. The company may be incorporated in IFSC, company may be incorporated in India, and company may be incorporated in any other foreign jurisdiction. So the direct listing norms, these are the very, I have presented in a table of form for easy to understand and, remember for a longer period. Like I was saying, FEMA rule compliance, so they have prescribed certain guidelines. For example, Indian unlisted company, they can list their securities only through book building process. Okay, and there are certain other, they should be having positive net worth, and there's certain requirement which they have prescribed in the direct listing scheme. We rather refer it to direct listing scheme, which is issued by the FEMA, issued under FEMA. This should not, I mean, this second part is just hygiene check. If you see revenue test, it's a very smaller amount from the revenue side, from the operating profit side, and if they're not able to meet it, and they have to meet it on the consolidated basis also, not necessarily on the standalone basis. And if they're not able to meet it, even 25 million USD post issue market capitalization, they are eligible to get listed on the stock exchanges here in IFSC. Only demat trading is allowed. We have depository, which is IIDL. Shares can be listed only in demat form. And of course, trading will happen in the 15 currency, which I have included over here. Here, I will explain a little more. I will take maybe 5 minutes on explaining this. See, Indian companies are allowed to get listed here. The IFSCA regulations are allowing Indian companies which are listed on the domestic market, they can also get listed over here. But there are certain things which are still to be ironed out. So IFSCA and SEBI together, because once company is listed in domestic, it is governed by SEBI. Once that company get listed over here in IFSC, also it will be governed by, this portion will be governed by IFSCA. So they are working on certain things related to takeover regulations or buyback regulations or some other things which will commonly impact the company. And once that is done, then I think circular will be issued, and that will allow Indian listed companies also to get listed over here in the form of FPO. And once that is going to happen, what is important, what I'm trying to convey to you all is that the reverse fungibility is not allowed. What I'm trying to say is that if company's listing is X equity shares, say 100 equity shares are listed in BSE and NSE, then they have to offer another, say 50 or 100 equity shares that will be listed in stock exchange in IFSC. And this reverse fungibility is not allowed, because the 100 equity shares which are listed in domestic stock exchange will be traded over there only. And the 100 equity shares which are listed here in IFSC will be traded here only. It may not happen that you buy a share of a company in IFSC and sell that company shares in BSE. And they said now you equal number of shares, and now you say that you square up my position. That is not going to happen, because here trading will happen in dollar or any of the 15 currency, and their trading will happen only in rupee. So therefore, reverse fungibility in terms of the depository is not allowed. So what is credited in the depository system over here will be settled and traded here only in IFSC, and what is credited in depository system in domestic will be settled and traded in the IFSL. So that is the important distinction that will happen. But like I am saying, the IFSCA and SEBI, they are working tirelessly to come up with the circular which will clarify the other parts. When that is done, even Indian listed companies can come here and get their equity shares listed. That is important thing which is in pipeline that to happen. Oh, I think this, okay, but still it have few things to explain. Now again, when the listing regulations were framed out, it was studied that unlike ICDR regulation, which is issued by SEBI, wherein the minimum investors requirement is mentioned, 1,000 investors or 50 investors, depending on which board you are getting listed, or that number may change. But there are minimum investor requirement if your IPO is fully subscribed by four people, but still you will not be able to get your securities listed in BSE and NSE, because it is that company technically is not meeting the minimum shareholders requirement, minimum investors requirement, which is prescribed in ICDR. Here, no such requirement is prescribed, because internationally, there is no such requirement to have this minimum number of persons subscribing to your IPO, then only you can get listed. That is another added advantage which I see. Over and above 10% only dilution, wherein you need not to go to 25% on any other person. You issue 10% and you can remain with the 10%. Second advantage is that there is no minimum investor requirement who should apply in your IPO, then only you can get listed. Then what happened in domestic is that ICDR regulation gives you specific category of investors in which you have to bifurcate your issue. For example, QIB, retail, HNI, these are the main three categories. But suppose in case you are coming under regulation 6.2 in ICDR regulations, we say that if you are not profit making company, still you can come up with an IPO. But in that case, your issue should be 75% of the issue should be allocated to QIB, qualified institutional buyer, and they must subscribe to that 75%. Otherwise, your issue will fail. So that kind of conditions are there in ICDR. Here, to which category, what percentage of your issue you are going to give, that is given to the issuer. So you best decide whether you want to have two category in your IPO, you want to have three category in your IPO, or depending on how you want to place your IPO in terms of the market. So that is the liberty which is given to the issuer, which is not there in the domestic market. And third is there is liberty which is given in terms of the allocation methodology. If we are the friends which are connected, if you are familiar with the allotment methodology which is available in the domestic market, there is a specific method in which the allocation need to meet. Minimum lot size should be issued to all the investors. There is no FIFO method, which is unlike bond issuance, wherein they normally do it on a FIFO basis, and the proportionate allotment should be made. So those are the checks and balances which is provided by IFSCA, by the regulator in domestic. Here it is again given to the discretion of the issuer that you decide that how you are going to do the allocation in case of subscription. But of course, whatever you decide, you disclose in your offer document. So the person who is subscribing should upfront knowing that, okay, these are the categories in which the IPO is placed. This, once I make subscription, this is the way the allocation is going to happen. Choice is yours. You make a choice, include in your offer document, and then come up with an IPO. IFSCA regulation also permitting foreign companies to come get listed, unlisted company. Their regulation is also allowing foreign listed companies to get directly listed over here. And they are also allowing the company to come and get traded on stock exchange in IFSC in permitted to trade category form. I think I will rush up because I just wanted to, highlight on the equity side, which is a more attractive part from my perspective also, and from, I guess, the other perspective also. Now, Pradeep sir was also talking about the global GA stand from the global assets. Global assets is that when we are providing an opportunity or a way for Indian investors to invest in the overseas market in a proper regulated way. We are the license holder, or we have a registration from the regulator to provide these services. I think there are around 4 or 5 global assets provider here in IFSC at present. Minimum 4, though, I think is there. But we are providing these services with the approval of the regulator for many years, because this regulation came recently. Now, what is happening is that suppose you want to invest in the mutual fund, you want to invest in the equity shares of a company which are listed in the stock exchange in US or Japan or any other jurisdiction which is permitted as per the government policy. Then, and the RBI has allowed Indian investors to invest up to 2.5 lakh USD as a LRS in the capital market transaction. But how you can do that investment in the stocks or ETF or the mutual funds, you don't know. So the global assets provider is answer to that. So how it is happening? This is what it is allowed. So it is not only for Indian investor, but it is focused for Indian investor to invest abroad using LRS money. If I'm talking about the resident India. And why we invest? We invest in overseas for our portfolio diversification. And if we are corporates, we want to hedge our currency and commodity risk. We want a higher growth rate. So these are the objects because of which Indian investors look for the investment opportunity in abroad. So what happens that we have a subsidiary, which I explained in my corporate structure above, which is Global Assets Provider, INXGA. We have a registration certificate from IFSCA, and we have tied up with the broker internationally, and they provide us, access to almost every permissible jurisdiction which is allowed under FEMA, wherein Indian investors can invest their LRS money to the stock exchanges over here. So you can invest in Hong Kong, US, Japan, I think Australia, all the stock exchanges in terms of bond equity derivative products. So that is the best route, and we are seeing a lot of traction over there. We are also coming up with the innovative product over there, which will provide more opportunity and attract more investors. We're also working on the various product that can be incorporated that I have just shown you above under the derivative category and other category on the stock exchange side. So going forward, the stock exchange will be our INX will be providing the complete bundle of the financial products, wherein investors from across the globe can come and invest in India. Our Indian investors who want an exposure or diversification can go and invest outside. I was thrilled to note when Pradeep sir has mentioned that the money is coming in India from around 70 countries. That was a news to me, and I'm very happy to note that we people are there in 70 countries to a level that we are coming back and investing in India, wherein our outbound is only to 20 countries. That was good information for me to note and mention in my going forward discussions. So this is just for information. We have launched an app over the mobile phone. So like for any stock exchange comes the clearing corporation. Whatever trading happens on the stock exchanges, it is getting settled on the clearing corporation. Like we have clearing corporation in BSE, we are also having a big clearing corporation here in IFSC for us, which is also a subsidiary of the our holding company, Bombay Stock Exchange. So with this, I come to end of my presentation. I wanted to cover the products which are available. Few I can discuss in detail. Few are not that stage that I can discuss in detail. But still, I'm there throughout the session for any question that may come, and I'm very eager, to hear from the ma'am. Thank you.
Thank you, sir. Madam, you can take it up.
Sure, thank you.
Taxation aspect, yeah.
Thank you. So I thank Bombay Chartered Accountants Society, IFSCA, India INEX for giving us this opportunity to discuss tax implications for NRIs investing in through gifts. So Ashok ji has already covered all of it. Most of the tax has been covered, but we'll try and see how we have the nuances for NRIs when they're investing into India. It's just buffering. Just give me 2 seconds for the slides to come up. Can you see the slides?
Yes, the slides
Okay.
are visible. Yeah.
Sure.
Yes, ma'am.
Thank you. So it's just taking some time, but I think Pradeep ji covered up very well to say as to what is the entire picture of GIFT City, how it started, and including the Percy Mystery Committee report. I think anyone who wants to be looking at Gift City, investing or otherwise, should look up the report. This extremely good report, very detailed as to how there are various phases in which gifts will evolve, starting from India focus to international focus. So it's an extremely good report which has come up. And Ashok ji had already covered the tax implications in one slide comprehensively. I'm not sure why it's not. Okay, so what we're going to be doing is, before we come to tax, I think this one thing which I wanted to bring out was the tax status of individuals. And there has been a lot of changes which have happened over the years as to who can be a resident, who can be a non-resident, and of course, resident but not ordinary resident. So I'll just have a little 1 minute on this tax status, then various streams of income that you can earn from IFSC as an NRI investing into it, and some compliances which are required to be done. Now, tax resident status, everyone is aware that if you spend more than 182 days in India, you will become a resident. If you spend less than that, you may not be a resident, but then you need to see whether you're a resident but not ordinary resident or a non-resident. And also one more important factor is that we have always been referring to the Income Tax Act of 1961. But the Income Tax Act of 2025 is already enacted. It is law and it's going to come into effect from 1st of April 26. So whenever we are now going to be looking at investments, we should have a look at the Income Tax Act of 2025. Going forward from 1st April, it's going to be implemented. And the Income Tax Act of 2025 is very well laid out. They have tried to combine sections and bring out everything at one place for a particular topic. So for IFSC, there's a whole Schedule 6, which is of relevance for anyone who is going to be having income from IFSC, to refer to Schedule 6 of the Income Tax Act 2025 to see what are the exemptions that are there available to you. Now, when you come to residents, one thing which has come out very clearly is that you also have the criteria of 60 days in a year. And if you have got 365 days in the past 4 preceding years. Now, the 60 days has been liberalized. Or can you say to say that it can go up to 182 days if it's a resident Indian, citizen of India who's going outside India, or if it's a citizen of India or PIO who's coming into India on visit. So the 60-day criteria is increased to 182 days. However, if you are an Indian resident and if your income is more than 15 lakhs, then this criteria of 182 days becomes 120 days. So it's very essential to have a look at it to say that if your income, Indian sourced income, is more than 15 lakhs, then this period of 60 days becomes 120 days. And you have to look at it for Indian residents. This is for Indian citizens and PIOs. You also have this concept of deemed residents. Now, this deemed residence is a very important concept which NRIs should look at it. It applies to Indian citizens with Indian income more than 15 lakhs, where you're not a resident or you're not liable to tax in any other country outside of India. So you become a deemed resident of India. And I think that's a bigger concern. And you should look at this deemed resident status whenever you're making investments into India. And deemed resident will generally be taken as a non-resident but not ordinary resident. So the concepts are important because the income which gets charged to India, if you're a resident, your global income gets taxed. But if you're a non-resident or a resident but not ordinary resident, then only your India income gets taxed. And therefore, you have to determine your tax resident status. Now we look at the various streams of income, and Ashok ji has already mentioned it. One is your bank account. NRIs have been having investments in India for several years now. We all know NRO account, if you have and you earn interest on NRO account, it is taxable in India. But if you have an NRE account, which is generally in foreign currency, the interest on the NRE account is not taxable. It's exempt from tax in India. We have similar provisions to say that if you had a deposit, though the word used is borrowing, there's a circular which has been said that there's no TDS on deposit or borrowing. So extended the circular to the section to say that if you earn interest on deposits with a bank in an IFSC IPO, then that interest should not be taxable. It should be exempt. Then investment specified securities. These are securities which are traded on the stock exchanges in IFSC. So they have listed out a lot of number of securities which you can trade on the stock exchange in IFSC. and if you earn capital gains on that, then that capital gains is not taxable in India. Now, when you look at the securities which have been listed, you have bonds or GDRs which are referred to in Section 115 AC. This references to the old Income Tax Act 1961. We're so used to it, and it still applies as of today. Rupee denominated bonds. Ashok mentioned about it that there are several rupee denominated bonds which are listed on the IFSC exchange. Now, if an NRI were to buy these bonds and sell these bonds to a non-resident in the IFSC itself and get money in foreign currency, they will not pay any capital gains tax on it. So rupee denominated bonds is there, derivatives are covered, and presently if you look at it, there are only derivatives which are listed on the exchanges there. So if you trade on derivatives on the exchange in IFSC, there is no securities transaction tax and there's no capital gains tax also. Foreign currency denominated bonds, units of a mutual fund which are allowed under 1023. So Indian mutual funds can list their units over there. Units of business trust, foreign currency denominated equity shares. Now we've heard a lot to say that you have Indian companies who can list equities there in the exchange of IFSC. The question that comes up is, yes, if it's a foreign company like a Microsoft or a Tesla, if they come and list their shares on the exchanges in IFSC, then of course it should be because it's in foreign currency denominated. Now, when an Indian company were to list its shares in the IFSC, the denomination of that shares has to be in foreign currency. So, presuming that it is going to be in foreign currency, then if you buy and sell those shares in the exchanges, NRIs buy and sell, then it should not be taxable in India. But you have to presume that the shares will be in foreign currency denominated. For an Indian company, can they do it? Will have to be seen. Units of alternative funds, AIFs, bullion depository receipts, and we've seen this also happening. Bullion depository receipts have taken off now, and we do see transactions in that. Then, of course, unit of investment trust, units of the scheme of the IFSCA funds which are there, and exchange traded funds which have been launched by all these funds. So, anything that is done on the exchange in IFSC, generally speaking, capital gains arising on that should not be taxable in India for an NRI which is there and getting the money in foreign currency. Income accrued arising outside India, even if received in India. So you do have capital market intermediaries like a fund manager who may manage your funds. So they may make investments outside India. They're managing the funds from IFSC. So the money may come into India. And if you look at the charge for tax in India, it says income received in India could be taxable. Therefore, this exemption has been brought out to say capital market intermediaries, when they provide services, and if a non-resident earns any income which is received in India but it's not accruing or rising in India, then that income will be exempt from tax. So NRI is putting in money outside of India through the IFSC capital markets intermediaries, their income should not be taxable in India. Then non-deliverable forward contracts, offshore derivative instruments, over-the-counter derivative contracts, which the non-residents can do with the IBU or can do with an FPI, which is registered for making investments. Then again, the income that is earned by such non-residents is not taxable in India. The IBU and the FPI would be taxable for all the income that they earn, subject to they getting the TLA deduction. But the non-resident, when they receive their income, it's not taxable in India. Then insurance policies. We've heard that you have insurance companies also which are set up in IFSC. So non-resident, if they were to invest in an insurance policy, NRI is investing in insurance policy in India, you could be taxed. And we've seen over the years, ULIPs have become taxable, subject to thresholds. Even the term policies or insurance policies have become, endowment policies have become taxable. But if you come through an IFSC, ULIPs are not taxable. So you get an advantage of putting in foreign currency plus putting in policy issued by them. Of course, the criteria which is still continuing is that the premium should not exceed the sum assured. So in case of, it should not be more than 10% or 20% of the sum assured. That criteria still continues. But otherwise, income from insurance policy could be exempt from tax. Then income from gains of category 3 AIFs. This is a very good category which they have established, which says that the AIF can be taxed, but the non-resident who is investing in this AIF, Cat 3 is not taxable in India. So they are not taxable on anything which they earn from the Cat 3, including on the transfer of the units of the Cat 3. So NRI can invest in a Cat 3 AIF in IFSC and earn tax-free income. And they don't even require to have a PAN or a return filing if they have no other income in India, which is difficult because the NRIs will have other income in India. But otherwise, if it's there, a non-resident could just invest in Cat 3 and have a tax-free income. The Cat 3, of course, could be taxable depending on the nature of income that they have. But Cat 3 also investing into India and debt securities or securities other than shares is exempt from tax. Only if they invest in shares, then the shares are taxable, capital gains are taxable. Now, an income which is, if an NRI were to invest in a Cat 1 or a Cat 2 AIFs, then of course they'll be taxable in India as per normal provisions, unless they get some treaty benefits. Interest in masala bonds, you mentioned there are so many masala bonds which have been listed. The rate of tax earlier, if you had issued within a period up to 23, it should be 4%. And after that, any issuance done after that, it should be 9% tax. If you were to invest in normal debt securities or in equity shares of India, then of course the rate of tax on interest and dividends. So if you have a FPI investing into India and you have invested in that FPI, the rate of tax is 10%. If you were to come directly into India and invest, and if you don't have treaty benefits, the tax rate could go as high as 20%. NRIs, of course, would be aware that India has a peculiar benefit scheme that they've given to NRIs when they invest in specified securities, which also includes shares in foreign current exchange. The long-term capital gains which is arising may not be payable if you keep reinvesting in that specified security. So there's a deferment of taxation, and you may not be taxed till you keep investing if you have acquired specified assets in foreign exchange. Now, when we have these investments that are being done in IFSC, if for any reason something doesn't get exempt under Section 47, which we have referred to that capital gains being exempt, then this is something which could be looked in by NRIs. We've just given select treaty, and I think this is very important to understand that if you come through a treaty, these are the rates which are there. If you don't have any treaty like a US or a UK NRI, if they are making investments in India, you could be taxed at a higher rate. But if you come through an IFSC into India, through a fund in IFSC in India, especially the Category 3 fund, your income is not taxable, plus the AIF Category 3 fund would be taxed at just 10% on the interest and dividend income. So this is something which needs to be looked into as to how do you make your investments now in India. Should you come directly or should you come in through an IFSC fund into India, or should you do transactions on the IFSC exchanges which anyway don't have tax? So when you look at the rate of tax on interest, generally US, depending on who's giving the loans and all of it, rate could be 10 to 15% for interest. And the lowest, if you look at it, is Mauritius, 7.5%. The UAE rate is again 10% on interest, but dividend rate, if you look at it, there are two countries which give a very low rate, 2 or 3 countries. UAE is 5%, but that is only if you hold a higher percentage of holding, which generally an NRI may not have. So you would come under 12.5%. Mauritius again is 5 to 15. Hong Kong is 5%. So if you have an NRI coming in from Hong Kong, of course, subject to you being absolutely a tax resident of Hong Kong and satisfying all conditions. But if you come in from Hong Kong into India, your rate of tax on dividends is just 5%. And taxability of gains on transfer of derivatives, units, bonds, if you come directly into India, these would be taxable. But if you come through a treaty country, then depending on treaty provisions, like a UAE, Singapore, Mauritius, they are not taxable. So if you come UAE, NRI invest in units in India, it's not taxable. But if a UK were to invest in units in India, the capital gains arising would be taxable for UK. Now, if the unit would have been listed on the IFSC exchange, and if UK NRI invest in those units on the IFSC exchange and trade on that, then the capital gains is not taxable. Or if they come through a fund, AIF Cat 3 fund into India, then again it's not taxable. So we need to look at all of these aspects to say, how do you make investments into India? Because IFSC does give a lot of tax benefits. On shares, you come through any mode. In treaty now, we don't have those benefits, except for a few treaties which are like Netherlands and Denmark and all of that. You do have Korea, you do have some tax advantages, but these treaties you don't have any tax advantages of coming. Compliance requirements, like I mentioned, PAN, If you have no other income and you're just having income investing in, say, Cat 3 AIFs or securities, then you may not require to have a PAN at all. However, if you have other income, you surely need to have a PAN, and it's best from a compliance perspective to have a PAN because it's easier filing instead of responding to queries which the department would raise if you don't file a return of income or you don't have a PAN. 15 CACB also requirements are there. So if there's any remittances which are happening, the units in the IFSC, depending on what is the remittance for, will require to get the 15 CACB. IFSC units also have to do certain reportings in 15cc forms which are there. And of course, FATCA CRS reportings. The financial institutions in GIFT City are in India. So from an income tax perspective, GIFT City is India. Even from an RBI perspective is India, but they treat them as non-resident entities. But from an income tax perspective, GIFT City is in India. So the entities could be resident, non-resident, depending on what they are. But FATCA reporting, FATCA CRS will get covered within the India reporting, and institutions in IFSC will report for all NRIs who are investing into it. So that's it from my side. Thank you, and would be happy to take questions on this.
So many thanks, Behroze ma'am, and all the other two faculties. My sincere thanks for enlightening the audience on this very important, unique, and probably a less discussed topic. I would have loved to take up the questions, but probably we are a little ahead of or rather short of the time. And I must recognize that while in the initial stage, when some of the questions were taken up, Behroze ma'am, took those questions immediately and answered those questions in the question answers box. So thank you, ma'am, for that. Some of the questions were whether the recording of this session would be available, whether the presentation papers would be available. So yes, recording will certainly be available, and the presentation, whatever with the consent of the faculties, we would be putting it on our BCS channel, as well as we have a BCS Academy. Just for information, most of our programs, which are digital programs, are already available on the BCS Academy platform. So those who are interested can log in, whether you are a member, whether you are not a member, both of you would be in a position to access those programs on some small visit and small payment. And I think some of the programs are free also. Before giving the well-deserved vote of thanks to all the three faculties, let me also for our audience, let me also make you aware of some of the very other important events that we have in the coming time. So tomorrow we have our Sakhi Circle, the Women's Study Circle, exclusive on the topic, the power of first and lasting impression, the soft skills. This is the first Women's Study Circle that we have started in BCS, which is exclusively for women. We also have a master class on standards on auditing, which will be conducted. It's a long duration course, which will be conducted from 19th January 26 to 21st February 2026 on various topics. There is also a seminar on TDS and TCS provisions, a 360-degree perspective, which would be conducted on Tuesday, 20th January 2026. We have a 59th members residential refresher course, which is a practice oriented course, which would be starting from 23rd January to 26th January. This is a course which is basically giving you the detailed analysis of 360-degree holistic revolution of the practice. Various speakers are there. All this information would be available on the BCS site, but I am just making you aware of this. There is a 23rd Residential Leadership Retreat, which will be conducted from 27th February and 20th February. There is also a 14th Residential Study course on Ind AS that will be started from 27th February to 1st March. And we have also announced our 30th International Tax and Finance Conference, which will be conducted on 9th April to 12th April. The budget dates are announced, so we would be also having our lecture meeting on budgets soon on 7th of February. So that will be in the Yogi Sabha Gruha. So it is a general meeting considering the entire tax implications coming out of the budget. So members can physically attend it in Yogi Sabha Gruha and take the benefit of this. Now coming to the well-deserved vote of thanks to all the three faculties. Shri Pradeep Ramakrishnan sir, thank you very much for covering the history pre 2012, 2012 onwards, and going forward, the objectives, uh, the entire ecosystem within which the IFSC, the GIFT City functions, a lot of verticals. You mentioned some interesting facts about the 70 countries which are contributing or the funding to this particular IFSC, and only 20. I think Mr. Ashok Kumar Singh also mentioned that particular aspect. The initial report that you also mentioned, mystery report you also mentioned, Behroze ma'am also mentioned. I think all those things are very learning things for us. As regards Ashok Kumar ji, your presentation, very power packed presentation, dealing with lot of regulatory aspects, products, especially from the listing of the Indian companies perspective, how the law has evolved over a period of time with FEMA India NDI amendments, IFSC listing regulation, SERR regulations with the first exchange listing. Very interesting perspective, and also the direct listing eligibility criteria that you discussed. Thank you for this wonderful presentation. And lastly, but not the least, Behroze ma'am, for taking us through the tax litigation aspects, especially the framework that you tackled when the NRI is coming through IFSC route and vis-a-vis the treaty benefits. I think a lot of thought process should be there in this particular area. My sincere thanks to all three of you for sharing your excellent knowledge. And I could see that although we have exceeded the time, still the audience were very much engaged by your excellent presentation. So thank you a lot for this wonderful sessions. Thank you all.
Thank you. Thank you very much.
Thank you, everybody. Thank you very much.
Thank you.
Thank you.
Thank you.